The Oversight and Investigation Subcommittee will come to order. The title of today's subcommittee hearing is the Federal Deposit Insurance Corporation's role in Operation Choke Point. Without objection, the Chair is authorized to declare a recess of the subcommittee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the Chair for inclusion in the record. Without objection, members of the full committee who are not members of the subcommittee may participate in today's hearing for the purpose of making an opening statement and questioning the witness. The Chair now recognizes himself for 3 minutes for an opening statement. Thank you for being here, Mr. Chairman. I want to thank you for your willingness and commitment to working with this subcommittee. Both you and your staff have been very responsive to our requests, releasing documents to us and making your staff available for questioning throughout the past week. I was, however, very surprised and troubled to learn that the White House doesn't share the same confidence in our mutual cooperation. As you know, we asked 3 members of your staff to voluntarily meet with both majority and minority committee staff for interviews, and they all complied voluntarily. Before one of the interviews, however, I understand there was a telephone conversation between the White House and the FDIC General Counsel, and concerns were raised over the former acting General Counsel's voluntary participation in the oversight process. To his credit, the FDIC former acting General Counsel nonetheless appeared as scheduled and met with committee staff. Kudos to him. I hope that this afternoon you will not be deterred by the White House's interference and instead continue to be forthcoming when answering our questions about how your agency is working to repair the business relationships that have been destroyed and damaged since the FDIC's so-called high-risk list was released several years ago. As many members know, this is the subcommittee's second hearing on the topic of Operation Choke Point, and the second hearing where representatives from the FDIC have appeared to discuss their role in it. Since then, most of the staff that we've spoken to at the FDIC, including you, have contended that you have not participated with the DOJ in Operation Choke Point, nor is the FDIC taking part in any way in Operation Choke Point. I imagine that that will also be your testimony today. But members have heard from too many of our constituents that even if the FDIC isn't calling it Operation Choke Point, examiners within the FDIC are making morally based directives on what is legal and law-abiding for businesses as they find banking partners. Using the term reputational risk, they are warning banks that if they do business with gun dealers, short-term lenders, payday lenders, ammunition manufacturers, smoke shops, and other legal businesses, they will meet the wrath of the FDIC. And if you disagree, Mr. Chairman, we have emails and memos from the FDIC to prove it. Their purpose is to choke off the business they don't like from the banking system. I have asked Chairman Gruenberg to testify today because I want to know where he got the target list from several years ago. And like the IRS, I fear that activists at the DOJ and the FDIC are abusing their power and authority, and they're going after legal businesses, and in effect, they're weaponizing government to meet their ideological beliefs. I hope today, Mr. Chairman, you can convince us that that is not the case. With that, I now yield to the ranking member from North Carolina, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. And if I may, I'll be from Texas today. Mr. Chairman, if I may just take a moment of my time to congratulate Jason, who's a part of our team. As you know, our staff does excellent work. And Jason, who's a part of our team, is not here today. He is on his way to consummate his marriage. And I'm honored to say that we will miss him, but we are proud that he is now taking on a beautiful bride. Mr. Chairman, I want to thank you and thank the witness for appearing as well. Mr. Chairman, for those who are watching today and unfamiliar with this term Operation Choke Point, it is generally viewed as a Department of Justice initiative aimed at protecting consumers by scrutinizing certain financial institutions and their role in providing access points to the banking system for industries and businesses with higher risk of fraud. And that's what we'll be talking about today, Operation Choke Point for the most part. Fraudulent transactions in our banking system are a real issue, not to be taken lightly. In 2012, the Federal Reserve estimated that there were 31.1 million unauthorized transactions worth $6.1 billion through third-party payment processors, which are businesses that for a fee take payments from consumers and deposit them in banks for merchants. In addition, a 2012 Economist article suggests that in the United States, 42% of Americans have experienced some form of payment card fraud in the preceding 5 years. Given that the FDIC is a prudential regulator of many financial institutions that take on consumer deposits, it should come as little surprise that they too are interested in addressing fraud in our banking system. However, we should not confuse the FDIC doing its job as a regulator as evidence that it is doing anything more than fulfilling its mission. Some have gone to great lengths to rely on email exchanges and supervisory guidance to connect the FDIC to this DOJ effort, Operation Choke Point. Reports have been published and accusations leveled. However, the truth remains that the FDIC has been monitoring and regulating fraud at the financial institutions it oversees long before there was ever a formal Operation Choke Point. Some may draw attention to a supervisory letter issued by the FDIC in 2011 highlighting a list of high-risk industries as evidence of their involvement in Choke Point by means of prohibiting banks from doing business with entities on this list. In truth, this was an attempt by the FDIC to help financial institutions be aware of the higher rates of fraud sometimes associated with certain industries. The list was compiled based on input from the third-party payment processors who do business with the industries. Nonetheless, when notified of concerns by banks that their list was potentially being misconstrued and misapplied during examinations, FDIC took definitive action to clarify that banks could continue their business relationships with any industry as long as proper due diligence was executed to protect consumers. And that's really what this is about, protecting consumers. Furthermore, in the interest of eliminating confusion, the FDIC retracted the list. These actions do not equate to a federal regulator overstepping its bounds to put businesses out of business. In fact, it illustrates a government agency willing to listen to the concerns of the entities it regulates and adjust its actions accordingly. I would, however, like to take a moment to recognize a more serious issue regarding the off-the-cuff comments made by employees at the FDIC as it relates to the banking relations of certain industries. While I do not think excessive credence should be given to remarks made off the cuff, I do expect FDIC examiners to act responsibly. I understand that an internal IG investigation is underway to determine whether any misconduct has occurred. Based on the actions already taken by the FDIC to be responsive to the concerns raised, I fully expect the FDIC to address these findings, if any, made by the IG. I will close by expressing my gratitude to the Chairman for his leadership, and I hope that this hearing will clarify the FDIC's longstanding mandate to combat fraud and protect depositors. Thank you, Mr. Chairman.
Thank you. The Chair now recognizes the Vice Chair of the Subcommittee, the gentleman from Pennsylvania, Mr. Fitzpatrick, for 1 minute.
Thank you, Chairman Duffy, and thank you for staying focused on this very important issue. We're here today because individuals within the Federal Government decided to create a policy that deliberately targeted specific businesses that, in their mind, had questionable business practices or were hurting consumers. While we can all agree that consumer protection is a noble and worthy task, the personal preferences of unelected bureaucrats must not be the policy of the United States. If a company or an individual is breaking the law, they should be held to account. However, extrajudicial punishment meted out arbitrarily runs counter to the American rule of law and, frankly, to the United States Constitution. These types of actions harm the economic security of our nation and destroy the trust that is critical between private enterprise and the Federal Government. It is my hope, Chairman, that we can come together to understand what the FDIC's involvement was in these practices and create a bipartisan solution to ensure that this never happens again.
The Chair now recognizes the Vice Chair of Monetary Policy and Trade, the gentleman from South Carolina, Mr. Mulvaney, for an opening statement of 1 minute.
Thank you, Mr. Chairman. Chairman Gruber, thank you for being here today. I'll make this very, very brief. I've been working on this for about 2 years, along with the gentleman from Missouri, Mr. Luke DeMeyer. Was stunned to learn about it in the very first instance I heard about it, and we've worked diligently to try and stop this program. And while we had heard that the program had stopped, I've had information come to me as recently as last week that not only is choke point not stopped, not only is it just continuing, it is expanding. It's broader now than it was when Mr. Luke DeMeyer and I started. And I'll talk to you specifically about that during my time. But I will assure you that there are a lot of folks up here on this dais and folks who are not here today for whom this is the biggest thing back home. This is it. I mean, this is, you're talking about choke point putting out of business people in my district, pawn shops, payday lenders, gun dealers. I'm from South Carolina, man. That's a big part of what we do. And it's a big deal for us. And so if you perceive a certain passion today in the questions, I hope you understand that this is not something intellectually removed from reality. It's not something that's theoretical. It's not something political. This is real. People in my district don't have jobs today because of choke point, and I look forward to talking with you more about that.
The gentleman yields back. We now welcome our witness, the Chair of the Federal Deposit Insurance Company, Chairman Gruenberg. Mr. Gruenberg was sworn in as the 20th Chairman of the FDIC on November 15th, 2012, for a 5-year term. Since August 05, Mr. Gruenberg served as Vice Chairman and member of the FDIC Board of Directors. Additionally, he served as acting chairman twice, once from November 05 to June 06, and again from July 11 to November 2012. Mr. Gruenberg holds a law degree from Case Western Reserve Law School and an A.B. degree from Princeton University's Woodrow Wilson School of Public and International Affairs. The witness will now be recognized for 5 minutes to give an oral presentation of his testimony, and without objection, the witness's written statement will be made a part of the record following his oral remarks. Once the witness has finished presenting his testimony, each member of the subcommittee will have 5 minutes within which to ask their questions. And without objection, and by previous agreement with the ranking member and I will each have 15 minutes at the end of questioning of the first round, as per agreement of the parties. I want to remind the witness that while you will not be placed under oath today, your testimony is subject to 18 U.S.C. Section 1001, which makes it a crime to knowingly give false statements in proceedings such as this one. You are specifically advised that knowingly providing a false statement to this subcommittee or knowingly concealing material information from this subcommittee is a crime. On your table, there are 3 lights. Green means go, yellow means you are running out of time, and red means stop. The microphone is sensitive, Chairman Gruenberg, so please make sure you're speaking into it. And with that, Mr. Chairman, you are recognized for your opening statement for 5 minutes.
Thank you, Mr. Chairman, Chairman Duffy, Ranking Member Green, and members of the subcommittee. I appreciate the opportunity today to testify about the FDIC's role with the Department of Justice's Operation Choke Point. One of the biggest changes in banking over the past decade has been the rapid growth of electronic commerce. With the growth in electronic transactions, there has been a corresponding growth in online illegal activity and consumer fraud. Much of this online activity requires access to the banking system, often through third-party payment processors, which has been a focus of supervisory attention. While the vast majority of electronic transactions are legal, identifying the illegal transactions hidden among the billions of annual transactions is a major challenge for banks and regulators. Banks that help facilitate or ignore warning signs of illegal activity can find themselves held liable for this conduct, which in extreme cases can even threaten the health of the bank. As a bank regulator, the FDIC has a responsibility to inform the banks under our supervision about developing risks in the financial system. It also is our responsibility to ensure that banks have policies and procedures in place to identify and monitor these risks and take reasonable measures to manage and address them. As we have stated, the FDIC's policy is that financial institutions that properly manage relationships and effectively mitigate risks are neither prohibited nor discouraged from providing services to customers, regardless of the customer's business, provided the customers are operating in compliance with applicable state and federal law. The FDIC's interaction with the Justice Department's Operation Choke Point grew out of the interest in ensuring that banks under our supervision are not facilitating illegal activity, especially online. I first learned about the FDIC's interactions with the Justice Department on Operation Choke Point in August of 2013, when I received a letter from members of Congress expressing concerns that the Justice Department and the FDIC were pressuring banks and third-party payment processors to terminate business relationships with lawful businesses. Upon inquiring, FDIC staff informed me that in early 2013, staff at the FDIC became aware that the Justice Department was conducting an investigation into the use of banks and third-party payment processors to facilitate illegal and fraudulent activities. As understood by the FDIC, the Justice Department's efforts were aimed at addressing illegal activity being processed through banks. The FDIC frequently coordinates with other agencies, both federal and state, in its supervision of its regulated institutions. Staff informed me that FDIC attorneys communicated and cooperated with Justice Department staff involved in these investigations based on an interest in any illegal activity that may involve FDIC-supervised institutions. Nonetheless, based on the expressed concerns, it became clear that there was a need to clarify and strengthen the FDIC's supervisory approach and processes. In an attempt to address these concerns, we have taken 5 significant actions. First, the FDIC issued a public statement clarifying our policy and supervisory approach. This was intended to ensure that examiners and financial institutions understand that banks that properly manage customer relationships will not be criticized for providing services to customers operating in compliance with applicable federal and state law. Second, the FDIC removed the list of examples from our outstanding guidance that was intended to provide greater clarity to the banking industry on how to safely conduct certain customer relationships. These examples came to be viewed as a prohibition on serving certain customers was clearly, in hindsight, a failure on our part. Third, the FDIC issued a memorandum to all FDIC supervision staff establishing new documentation and reporting procedures where the FDIC directs a financial institution to discontinue deposit account relationships. Any such direction by an examiner must be in writing, must identify the legal and regulatory basis for the action, must be approved by the relevant regional director before taking effect, and must be reported quarterly to the FDIC board. In addition, I met with our 6 regional directors and took part in a nationwide all-hands call with FDIC examiners to make clear our policy and the importance of following the procedures. Fourth, the FDIC published a toll-free number and email address for both the FDIC Ombudsman and the Inspector General to encourage institutions concerned that FDIC supervisory staff are not following FDIC policies on providing banking services to make confidential reports to the Ombudsman or IG. And finally, the FDIC also issued a public statement on de-risking, encouraging banks to take a risk-based approach in assessing individual customer relationships rather than declining to provide banking services to entire categories of customers without regard to the risks presented by an individual customer or the financial institution's ability to manage the risk. Looking forward, as was noted, the FDIC's Inspector General is examining allegations concerning the FDIC's role in Operation Choke Point and allegations that have been made in regard to FDIC employees. We are cooperating fully with the IG. When we receive the report, we will review the findings carefully and take appropriate action to address issues identified with either our procedures or our employees. That concludes my statement, Mr. Chairman. I'd be glad to respond to any questions.
Thank you, Chairman Gruenberg. The Chair now recognizes the Vice Chairman of the Subcommittee for 5 minutes, Mr. Fitzpatrick.
Thank the Chairman. Mr. Gruenberg, community banks in my district have felt the direct and harmful effects of Operation Choke Point, and so have several private employers. The result, more red tape, costly legal fees, less capital for lending, and frankly, just like in Mr. Mulvaney's district, employees in my district have lost their jobs as a result of an operation that I believe neither the Department of Justice nor the FDIC wanted to be public at all. We've all seen the emails and communications that at the very least suggest that bank examiners' personal opinions of particular industries have colored their views on what is considered high risk. Recently, your office issued guidance, though, stating that banks should look at individual businesses rather than entire industries. Is that true?
Yes, Congressman.
What procedures have you put in place internally to ensure that examiners are not pressuring regulated banks to deny accounts and access industries that they personally disapprove of?
Congressman, as I just outlined, we have established written procedures to be followed in implementing the policy. Anytime an examiner believes that a bank should discontinue a relationship with a customer, that recommendation has to be put in writing. The writing has to explain both the legal and regulatory basis for the action. The recommendation then has to be reviewed by the regional director before it can take effect, and any actions that actually may be implemented have to be reported on a quarterly basis to the—
Is there a mechanism for banks that believe that they've been impacted to file some sort of a complaint with the FDIC?
Yes. As I also indicated as part of the announcement that you referenced, in the statement, we provided a phone number and email address for both our ombudsman and the FDIC inspector.
And what are the sanctions for examiners that violate, if a complaint is justified? What are the sanctions?
Well, it would depend on the action of the examiner, and it would be subject to the review by the agency, and ultimately, if there's a basis for it, a disciplinary action.
I know that we're all wondering how exactly the FDIC would determine that a particular industry was high risk when it produced the original list of industries.
The list that I think is referenced appeared in a journal that the FDIC publishes called the Supervisory Insights Journal. There was an article, I believe, that appeared in June of 2011 that contained this list. The article was by two of our career employees, and the article was about giving information to banks about managing their relationships with third-party payment processors. And as part of the article, there was a list provided identifying categories of merchants that may pose an elevated risk, that banks have to do appropriate due diligence in regard if they're going to provide services to those customers.
But what type of criteria certified a business in the eyes of FDIC to be high risk?
Yeah,
what were you using?
The list was drawn, as I understand it, and for what it's worth, that article appeared before I became chairman, but I believe the list was drawn from industry lists that had been compiled identifying merchants that may pose an elevated risk to do business with, as well as experience that the FDIC had through its examination activities.
And what liability do banks face if they do business with clients that the FDIC determines to be high risk?
As long as the bank has appropriate controls to manage the risk, and as long as the customer itself is doing its business in compliance with the law, there should be no issue. And frankly, that's why we issued the guidance to try to make that as clear as we can, and it's why we've adopted procedures to try to ensure that the guidance is being followed.
Are examiners permitted to tell bank officials that their banks and/or individual employees of those banks they may face criminal charges for doing business with particular clients?
Only to the extent that if a client should be, if a customer should in itself be engaged in illegal conduct, then that obviously poses a risk and a potential liability for the institution. But I think the point of the guidance we've issued to our examiners is that if they think a bank should not continue a customer relationship, it has to be provided in writing to the institution. And in addition, the guidance says two things specifically. One, informal direction it should not be provided. It has to be in writing. And the guidance specifically says a reputational risk by itself is not a basis for such an action.
The gentleman's time has expired. The chair now recognizes for 5 minutes the gentleman from Missouri, Mr. Cleaver.
Thank you, Mr. Chairman, for the hearing, and Ranking Member Green. Mr. Chairman, let me ask you a couple of questions. Do you receive any direction from the White House?
No, Congressman.
Has the FDIC given any kind of direction to the Department of Justice to investigate financial institutions, particularly selected by FDIC or you?
As a general matter, no. Depending on the context, we may, if we develop information, we may refer something to the Justice Department.
Was the high-risk list a plan to stop banks from doing business with those entities that were listed?
I don't believe so, Congressman. As I indicated, the list that's referred to was in a Supervisory Insights Journal article that appeared first back in June of 2011. I think the idea behind the article and the list was to provide information to banks on managing these client relationships. I will say, as I indicated in my statement, that I do think the list was subsequently misunderstood. There were misimpressions of it, and conclusions were drawn that categories listed identified on the list were not eligible for banks to do business with, and that's really not the case. And frankly, the fact that the list was viewed that way from our standpoint was a failure on our part. It's the reason we ultimately withdrew the list, because we believed it was being misunderstood and being misapplied in effect.
I appreciate that statement, and I had read your comments on that previous to this hearing. What I'm trying to get clarity on is, was there some political motive, people moving through the shadows, meeting down in basements with no lights, plotting against businesses that they didn't like, and then you and the AG press a button and you go and get these bad guys and put them on a list of nasty companies?
Not to my knowledge, Congressman.
No cigar-smoked rooms, filled rooms with your staff and under the basement of the White House?
Not to my knowledge.
Park across the street. Frankly, I'm glad that you removed the high-risk list. I'm hoping that we can deal with this without there being some subliminal reason for this being done, other than the reasons that I think are fairly clear to us. And one of the roles of this committee is, of course, to try to find out what's going on, and it's our responsibility. And so tough questions are supposed to be asked. My questions were not particularly tough questions, but they were aimed at trying to hopefully bring some clarity to this whole issue and its genesis. So I just wanted to find out whether or not you've been secretly meeting with the president, maybe on the basketball court in the White House South Lawn?
No, sir.
How often do you meet with the president?
I've had 3 opportunities during the course of my service, as the president each year has met with the financial regulators as a group, and I've had the privilege of participating in those meetings.
Did he slip you something to the side, a sheet of paper?
No, Congressman.
Okay. I have no other questions. Thank you.
The gentleman yields back. The chair now recognizes the gentleman from Tennessee, Mr. Fincher, for 5 minutes.
Thank you, Mr. Chairman. This is I appreciate the questions from my gentleman on the other side of the aisle, but this is a very serious situation for states also like Tennessee, where we have a lot of folks who participate and who deliver this product for the consumer. This is not about one specific business, but this is about the consumer having a product that they can use to help them get by in their day-to-day life. My question is, according to the report on the House Committee on Oversight and Government Reform, a senior FDIC official effectively ordered a bank to terminate all relationships with payday lenders. On February 15, 2013, the director of the Chicago region wrote to a bank's board of directors and informed them that the FDIC had found that activities related to payday lending are unacceptable for an insured depository institution. So my question is, explain the legal basis or authority for such a sweeping order in the absence of explicit findings or violations of the law.
Thank you, Congressman. The letter that you referred to was in the...
And I have the letter also here.
No, I understand. And the quote that you referenced was not consistent with our policy, and frankly was a mistake, and was one of the things that prompted us to be concerned about the misunderstanding of what our policy was, and led us in September of 2013 to issue a financial institution letter to clarify that policy. And the clarification stated that as long as a bank has appropriate controls, and as long as a customer is complying with the law, a bank is neither prohibited nor discouraged from doing business with that customer. So the letter you referenced was not consistent with our policy.
And following up, there seem to still be quite a few businesses or quite a few banks that are intimidated by all of the ongoings from day one of Operation Choke Point, which you can say it or not, it was political from day one. The term even's political. Are still intimidated to allow businesses to do business with them in regards to maybe, a mistake, that this letter was a mistake. You referenced that. So what are you doing proactively to get the word out saying, it's okay, this is legal, this is okay to provide banking for these businesses that have done nothing wrong? That's the problem here. Just because you may not like it doesn't mean it's illegal.
Oh, look, I agree with you, and Congressman, for what it's worth, we have made multiple efforts now to clarify that to both bankers and to our examiners. So we issued the financial institution letter in September of 2013, clarifying the policy. We issued a financial institution letter in July of 2014, withdrawing the list and explicitly saying that it's just a question of having appropriate controls by the bank and the customer complying with the law. And then we issued a statement in January, a public statement indicating to banks that risks should be determined on an individual customer basis, not on the basis of a category of business to which the customer may belong. And we've issued public guidance to our examiners, laying out the specific procedures for our examiners to follow. And we have established and made public both phone numbers and email addresses to our Ombudsman and our Inspector General, so that if a banker believes that an FDIC examiner is not complying with the procedures.
Could you provide us with that information?
Yes, sir.
And just wrapping up, I've got 45 seconds left. If back to the letter, if it's against your policy to do things like this, then why was this ever done?
I think it was a mistake, frankly, on the
Whose mistake?
of the author of that letter.
So are they still with the FDIC?
They are still with the FDIC.
What was the penalty for making this mistake to go after legal businesses?
Well, as you know, the House Oversight Committee undertook a report, was one of the items identified in that report. After receiving the report,
What were the consequences for the actions?
well, we've requested our Inspector General to review the conduct of the individual there, as well as a number of others, as well as any others that the Inspector General may identify. And that review is currently underway.
I yield back.
The gentleman's time has expired. The chair now recognizes the gentleman from Washington, Mr. Heck, for 5 minutes.
Thank you, Mr. Chair. I'm always hesitant to follow my friend from Tennessee, but I'll endeavor. Chairman Grunberg, several months ago, your general counsel, whose name I think was Osterman,
Yes, Congressman.
sat here and said that legitimately constituted marijuana businesses in those states that have legalized it, either through legislative action or vote of the people, that followed FinCEN guidance wouldn't have anything to worry about from FDIC. Have you formalized that position in writing in any way? Because I have to tell you, I interact with banks and credit unions all the time, and they're still walking on eggshells.
Yes, Congressman, we have put in writing in a letter that our direction to banks is to follow the FinCEN guidance.
We would deeply appreciate being able to receive a copy of that. With respect to marijuana producers and dispensaries, as you know, the Department of Justice's Cole memorandum requires conformance with 8 federal priorities to qualify as legitimate. It's important to note the first 2, keep it out of the hands of kids and keep cash out of the hands of the gangs and cartels. Both the state entity that regulates them and any bank or credit union that serves them are required to be checking for conformance with the same 8 federal priorities. Now, in my state, where the voters did approve it, we have a State Liquor Control Board, which regulates marijuana businesses. They are working with financial institutions to allow banks and credit unions to check the Liquor Control Board's database for red flags before they process any transaction for a marijuana business. And frankly, it seems to me that this is just a much more effective and efficient way, we're always looking for efficiencies here, for compliance checks. But frankly, I worry that it's being undermined because the FDIC insists that banks do their own checks, notwithstanding the fact that we have a regulatory entity that is set up. It seems to me that you could check how robust and muscular the Liquor Control Board's effort is and sign off for that to be the one-stop shopping by banks so that everybody wins. What's wrong with that idea?
Well, if I may, Congressman, let us take a look on that, and we'll be glad to engage with you in regard, and you and your staff in regard to it.
I look forward to your response, and I appreciate your willingness to follow up. I have a kind of a philosophical question about SARS, suspicious activity reports. Obviously, it's up to the bank or the credit union to decide whether or not to close a bank account, and I think it should be, so don't interpret my question to mean anything other than that. But I wonder, frankly, whether or not the mere fact of generating multiple SARs necessarily leads to the best decision to close the account. And why do I say that? Well, that's how we can track them. If we're ever going to want to do anything, that's our access point. That's the transparency. And if the reaction is you hit X number of SARs, you're gone, the reality is they either A, figure out a smarter way to get around indicating reasons to be put on the SAR list, or B, they go all cash, thus not benefiting anybody, frankly, and being counterproductive from what we're trying to get at. What's your reaction?
That's probably a tricky call on the part of the institution because, as you know, they're under a legal obligation if they identify suspicious activity to report it. So, frankly, I'd have to give that one a little bit of thought, I think.
It's not the reporting. It's the closure that I wonder about. Because it seems to me you just took the teeth out of our ability to enforce. Lastly, quickly, I want to go all the way back to Wachovia in 2008 and have you just comment briefly on the fraudulent activity you found and stopped, and if you will recall, how much money was returned to consumers on the basis of your enforcement action?
That was, as you know, Wachovia was a nationally chartered bank under the supervision of the OCC, so I believe it was actually an OCC enforcement action, but we can certainly get that information for you, Congressman.
My recollection is it was a very large number with lots of zeros.
It was substantial.
Thank you for your service to community and nation, sir.
Thank you.
I yield back the balance of my time.
The gentleman yields back. The Chair now recognizes the gentleman from Colorado, Mr. Tipton, for 5 minutes.
Thank you, Mr. Chairman. Appreciate you, Chairman, for being here today. I guess I'd like to drill down a little bit in terms of once you've issued this new guidance and it's gone out to the banks, what are you doing to be able to repair that relationship actually with the customers?
Well, as you know, Congressman, our relationship is with the institution.
But it was your actions that separated some businesses
no, I agree,
from
and
the relationship with the banks.
And that was, frankly, that's the issue we're trying to address. I don't know that we can, to the extent there was an impact in the past because of misunderstandings in regard to what our policy was, that's something we regret and frankly acknowledge the failure if there was any consequence of that kind as a result of the list that was issued. I think our objective now going forward is to ensure that our policy is well understood and consistently implemented so that any business that's complying with applicable state and federal law should have access to a banking relationship, and that the bank should be clear that there is no prohibition or discouragement in regard to that. And 2 points. If an examiner should ever raise a question or recommendation, again, as I made clear, we've now established policies where anything that's directed has to be in writing. The legal and regulatory basis has to be provided, and it can't be simply on some reputational concern, and it cannot be informal. So we hope there's a sense of accountability here so that the institution, so that it only occurs in appropriate circumstances and that the institution is given clear notice.
You know, part of your mission, obviously, safety and soundness of our banks. Businesses have pretty much the same concern for their own safety and soundness, and arbitrarily, it sounds like it was just a big mix-up, and gosh, we made a mistake, and we feel bad, and now we're going to try and correct it. But there is institutional damage, effectively, that you put into place. How are you going to address a bank? You have a list that you've now wiped away. That's like going before a jury and saying, after testimony has been given, and saying, disregard that. You've heard it. Are you going to see a potential problem in terms of those relationships going forward for fear with maybe the threat of jail, other penalties going on? The banks are simply not going to handle these businesses as customers.
Yeah, look, I hope that's not the case. We are making every effort. I should say, just to be clear in terms of communicating to our examiners what the policy and expectation is. I met personally with all 6 of our regional directors, and as I indicated, I took part in a nationwide all-hands call for our examiners around the country to make clear both what our policy is and what the procedures are we expect them to follow. We have a very deep commitment to following through on this. I understand the concerns you raise. If a business is engaging in
do you feel this is being effective, your policies now?
We announced the policy with the clarification of our policy a year ago. The procedures that I outlined were just announced in January, and I am hopeful and committed that they're going to be effectively implemented.
I guess, Chairman, the reason I raise this, the FDIC issued a financial institution letter in September of 2013 clarified for the employees and institutions the policy and the supervisory approach. That was followed up 10 months later in July of 2014 with a second letter restating the policy. According to the OGR Committee's report during those 8 months, FDIC examiners were discouraging banks from having relationships with short-term lenders. What's that telling us in terms of effectiveness of policy? Are you going to have to keep revisiting this on a quarterly basis in terms of lining it out to your folks?
I hope not, Congressman. And as you know, we received that report from the Oversight Committee, I believe, in December of last year. And pursuant to that report, there is now an Inspector General review going on, both identifying the FDIC's conduct of its policy and whether it was consistent with the law and regulation or not. And there were also specific individuals identified whose conduct is now under review by the Inspector General. So, I am hopeful with these combined efforts we'll be able to address this issue effectively, but I agree it's going to be an ongoing effort.
Follow up with my colleague from Tennessee's question. Is this going to be a slap on the hand, or are these employees going to look at termination?
Well, the Inspector General is reviewing the conduct of these individuals. When that report is submitted, it's ultimately going to be reviewed by our board, and it's a review that will not be done unilaterally by me, but I will do it in conjunction with our two inside directors, Vice Chairman Tom Honig and Director Jeremiah Norton. So the three of us will have the opportunity to review and make a judgment on the facts found by the Inspector General, and then presumably take action that's appropriate.
The gentleman's time has expired. The Chair now recognizes the gentleman from California, Mr. Vargas, for 5 minutes.
Thank you very much, Mr. Chairman, for the opportunity to speak. Mr. Chairman, thank you for being here today. Listening to my colleagues here, we all have very different situations. I represent the border area of California and Mexico. My district literally runs from the ocean all the way to Arizona, so every inch of the California-Mexico border is actually in my district. I also have some areas in San Diego and all of Imperial County. One of the things that we've done for years is tried to get banking services in underserved areas and poor areas, and certainly one of those areas is along the border. The community of San Ysidro and the community of Calexico in the past had a real difficult time trying to get bank branches to open there. But then they were successful through community efforts as well, I think, as banks saw an opportunity. One of the things that you do see along the border, of course, are a lot of cash businesses. And the banks, I think, have flourished and done well. And in fact, I don't think we've had some problems, but not out of the ordinary. But you do see a lot of cash transactions. Recently, we've had a lot of banks close their branches there. In fact, significant amount, and I know I had to go and speak to a couple of the banks to beg them to keep some of the branches open. And what they're saying, one of the big reasons is because of this operation point, that it's been very difficult for them because of that. Could you comment on that, if you have any knowledge of that, if you could speak to that at all?
Congressman, I had not heard that particular concern raised for institutions in the area that you describe. We would be glad and frankly would welcome the opportunity to meet with you and your staff to discuss that.
Well, I would appreciate that very much because, again, these are merchants that have been longtime merchants. These are banks that are very, they range from literally small community banks all the way up to very large multinational banks. Well, I shouldn't say, but very, very large banks with huge deposits. So it's not your just little tiny banks who have had problems in the past. It's frankly almost all banks that are leaving the border, and this is the issue that they're pointing at. So again, I would like to know what is it that you can do when we meet, because that, to me, is a great concern. Again, we've tried for years to bring banks into these areas to bank people, and we've had an opportunity to do that, and it seems like they're all going away now.
Thank you.
Okay. Well, Mr. Chairman, those really were my questions. And again, very different. Everyone has very different and unique aspects. We don't have marijuana problems. We don't have other issues. But this is a real big problem for us. So I really appreciate you bringing it forward. Thank you.
The gentleman yields back. Thank you, Mr. Vargas. The Chair now recognizes the gentleman from South Carolina, Mr. Mulvaney, for 5 minutes.
Thank you, Mr. Chairman. Chairman Gruberg, I've got a letter in front of me dated February 15, 2013. It's signed by Anthony Lowe, one of your regional directors at the time, and I'm going to read just one or two sentences from it. It was directed to a board of directors at a bank. It is our view that payday loans are costly and offer limited utility for consumers as compared to traditional loan products. Furthermore, the redacted relationship carries a high degree of risk to the institution, including third-party reputational compliance and legal risk, which may expose the bank to individual and class actions by borrowers and local regulatory authorities. Consequently, we have generally found that activities related to payday lending are unacceptable for an insured depository institution. Was this the official position of the FDIC in February 2013 when this letter was written?
No, Congressman. As I previously indicated, that letter was not consistent with our policy, and it was really one of the things that prompted us to issue the guidance clarifying it in September of 2013.
And if I were to ask you the same question, instead of, if I took out the words payday loans and inserted pawn shops, tobacco shops, gun dealers, ammunition manufacturers, that would also be the case. It was not the policy of the FDIC in 2013, and it is not the policy today.
That's correct.
And I see that I don't have the document from later in 2013. I do have the one from July of 2014 that you've referenced here a couple times today. In December of 2014, I got a phone call from a pawn shop in my district that had been denied a loan to expand their business. They needed $1 million to expand their pawn shop. The woman, it was a single woman who ran it and was hoping to pass it on to her 2 grown children, needed to borrow $1 million and went to the bank that she had a 25-year relationship with and offered to post $500,000 in collateral and borrow effectively 50% of the cost. She was told by that institution, which is overseen by the FDIC, that they could not lend to her because of the nature of her business. She then went to 2 other banks in the same community. It's a very small town where I live, and got the same answer. My specific question to you is this. What remedy is available either to that lady or to that bank for that outcome?
So, I can't speak to the facts of the circumstance, but if I may
Sure.
try to respond, if indeed that's what occurred, that would not be consistent with our policy. If indeed the banker,
Then let me ask it this way. Let's say that let's say I talk to the banker and I say, "Who is your examiner?" And they know, and they'll tell me. What should that bank do in order to straighten out this difficulty?
I think a couple of things, if the bank is willing. One, to report it to the supervisor of the regional office to make us aware of it. There's also a dedicated number to or email address to our ombudsman to report it on a confidential basis, or there's also a number and email address to report it to our Inspector General.
Now, after you issued the July 2014 advisory letter, the institution letter, you were still having difficulties with choke point, weren't you? People were still calling to complain about choke point being used to deny them access to credit.
I think fair to say we were still hearing concerns.
Sure, and that was at least one motivation for the January 2015 additional guidance, correct?
Yes.
And you came in and I think you said the language here, it says that you encourage, this is from the summary, not the actual text, it's the summary that you provide, encourages insured depository institutions to serve their communities, goes on to say that you encourage them to take a risk-based approach in assessing individual customer relationships rather than declining to provide banking services to entire categories of customers without regard to the risks. That's January of 2015. Last week, it happened again in my district. Last week, a business with a decades-long relationship with their bank. At many different levels, by the way. The company is a diversified company, and one of their businesses happens to be payday lending. And their bankers came to them unsolicited. They weren't asking for a new line, weren't asking for any new credit, no new loans. Came to them and said, "Look, we really like the relationship with you and we want to continue it. We just can't do it anymore for your payday operation. You need to close your checking and savings accounts with that."
Well, Congressman, if the bank is willing, we would certainly, and I understand the concern about reprisal, so it's what makes these situations
Why I'm not using the
difficult.
names.
I understand. But if the bank is willing, we would welcome the opportunity to engage with the institution and understand the facts of the situation.
Lastly, and this is the question I referred to, I think, in my opening statement, I've got another example that I won't go into in great detail where a similar thing happened in my district with a bank that was not overseen by the FDIC. It's overseen by the Office of Controller of the Currency. So my question to you is this. Are you aware of any of the other regulatory agencies engaging in similar Operation Choke Point-like activity?
I mean, not to my knowledge.
Did you share the directives that you gave in your 2014 of July letter and January 2015 letter with the folks at the OCC, with the Fed, with anybody else?
Yeah, those are public documents, Congressman, so they would be available to all the agencies.
Thank you, sir. Thank you, Mr. Chairman.
The Chairman's time has expired. The Chair now recognizes the gentleman from Maine, Mr. Poliquin, for 5 minutes.
Thank you for being here, Mr. Chairman. This report from last year concludes that your agency and the people that work for you had a list of firms, of businesses that were questionable or disreputable. And they, and you folks, instructed your examiners with a directive listing this group of businesses that were questionable, disreputable in the opinion of your examiners or the folks that you work with in the front office, and instructed banks to put pressure or the examiners to put pressure on those banks so they would not extend loans and debit transaction processing and so forth and so on to try to drive these, presumably these businesses out of business. Now, what do you say to a three-generation family business outside of Bangor, Maine that I represent that sells firearms and ammunition legally and also sells tobacco, and maybe they sell some fireworks? I'm not done yet.
I'm sorry.
Thank you. What gives you the right, or anybody that works for you the right, or your agency the right, to tell what businesses who are operating legally in this country, where the owners have sacrificed their saving, their hard works, grown their businesses, hired their family members and others, what gives you the right to try to shut them down, sir?
We don't have that right or authority, Congressman.
You don't, but you did it, didn't you?
That's something we've now asked our inspector.
But you did it, didn't you, sir?
I'm trying to.
Please, I've got 3 minutes left.
Yeah, I understand the findings from the House Oversight Committee report, and as a result of that report, our Inspector General is conducting a review.
Well, if I'm not mistaken, sir, based on the timeline that I have, there was a period of time where you asked this list to be expanded. Is that correct?
Not to my
That's
knowledge.
not correct. I want to make sure I hear this correctly.
Yeah, I'm not
you
sure
did
what you're
not ask for
referencing.
this list of questionable businesses ever to be expanded. Is that correct?
I think if I may say what I think you may be referencing.
It's a very simple question.
Yeah, no, if I may answer, I'll try
Please.
to. The list that you're referencing appeared in a supervisory insight.
That's correct, which is a directive to examiners dealing with banks, correct?
That's an article that's not actually guidance, but it's informational to the industry.
So
actually,
certainly
the bank.
they get the message. Did you, in fact,
No.
you did not ask to expand this list to include firearms dealers?
No, sir. There was guidance issued in January of 2012 following on that Supervisory Insights Journal article, and there was in that guidance, there was identified some examples.
Okay, I understand your answer. You did not in any way, at any time, ask to expand this list of industries.
To expand the
That's
list?
what I
No,
heard.
not to my
Okay,
knowledge.
fine. Thanks. Let's move on. You know, there's a pattern here, Mr. Director, of government agencies like the Internal Revenue Service intimidating law-abiding citizens because they don't have the same political views as maybe the regulating agency, and the administration wanting to give amnesty to 5 or 6 million people, which is not set in law, and now all of a sudden you folks come along. You know, I think you folks, frankly, are a threat to our economy and our way of life and the employment that we have in this country. What do you say to the employees who have lost their jobs because of the overreach of your agency asking examiners to intimidate banks to shut down credit to businesses that are trying to survive? What do you say to those families who have lost those jobs?
Well, to the extent it's it's occurred or an issue, it needs to be addressed, and we've asked the inspector.
Yeah, but we just heard that the folks who were involved in this, this mess are still working at your agency. Is that correct?
Yes.
That is correct. Okay. So when did you find out about this?
Well, the report that you referenced was released in December.
Yeah, when did you find out about it, sir?
About the allegations that you're raising, I believe when we received the report. And pursuant to that, we requested the Inspector General to review the conduct.
Okay, so how long have these people who are involved in this mess, how long have they still been working at your organization?
Well, these are career employees.
I don't care who they are. How long have they been how long has it been since the report came out that they're still working there?
Well, the report came out in December, and this is March.
Okay. Thank you.
The gentleman's time has expired. The chair now recognizes the gentleman from Minnesota, Mr. Ellison, for 5 minutes.
Thank you, Mr. Chairman and Ranking Member. Mr. Grunberg, I represent a district in Minneapolis, Minnesota. It's 5th District of Minnesota. It's home to America's largest Somali American population. We're very proud of our community, and they make tremendous contributions to our society every day. But one of the problems that they're facing is that the money that they earn, that they try to remit back home through Somali money service businesses, is being reduced tremendously. Is this effort, is this a phenomenon where we see the MSBs having their options cut? Is it part of Operation Choke Point?
I don't believe so, Congressman.
Now, when you say you don't believe so, are you saying that it could be, but you just don't know about it? Or just, I'm not trying to be difficult.
Sure.
It's just that I would far and away prefer yes or no. And do you understand what I mean? Because when you say you don't believe so.
No.
Okay. So no, it's not. All right. And I want to say thanks for the FDIC statement about serving money services business. What kind of feedback did you get from your regulated financial institutions about the statement that you all put out? And did they think that the statement added clarity or increased understanding?
I will say the general response has been positive, because it both clarified the policy, and we hope our procedures will ensure that it's followed.
Okay. And were the banks more willing to provide checking accounts and/or wire transfers to money service businesses serving vulnerable nations because of your statement?
Well, I can't speak to that, Congressman.
Okay. And there seems to be a disconnect between what Treasury and FinCEN say and what examiners tell banks specifically about know your customer requirements. Banks believe that they must know their customer's customer, even though FinCEN and Treasury say that that is not necessary. Do you have any reflections on that?
Yeah, though, and I agree with what you, in regard to the FinCEN position, that the obligation is to know your customer and not to know, as you say, the customer of your customer.
Right. So I've talked to a lot of bankers about this problem, and what they tell me is that they feel the need to be infallible, even though infallibility is not a required standard. Do you think there's a disconnect between, there's a disconnect, or do you think that the rules are very clear? Do you think there's some more clarity that we could be doing?
We actually issued guidance trying to clarify that point, that this is not a no fault or no mistake system. We understand that that mistakes may be made. The issue is, do they have an appropriate set of controls and policies? It's not a mistake-free environment. We understand that. And we've tried to make that clear in our guidance.
Is the FDIC part of any interagency working group to restore remittances pipeline?
I believe there is an interagency effort, and we have participated in that.
Can you give me some assessment about how well that interagency group is working?
Well, I think it's receiving serious attention. As you know, it's a challenging issue. So I don't know that we have a solution yet, but I think it's going to require a high-level effort among the agencies in conjunction with the Treasury and State Department as well, I expect. And I know you've been leading that effort.
Yeah. Has the FDIC engaged with a working group on remittances to East Africa convened by the Federal Financial Institutions Examination Council? FFIEC?
Yeah, I'd have to check on that if I might, Congressman.
Yeah, well,
I don't know.
you could respond to that in writing. Do you think well, let me ask you this. Do you know anything about the FFIEC?
Yes, we're a member of
Okay.
the FFIEC.
Do you think that they can make a contribution toward restoring humanitarian remittances? Do you think they're an important player to have involved?
Yes, I do. They represent, as you know, the regulators of the insured depository institutions.
Okay. All right. Well, I think that's pretty much the end of my time. So I want to say thank you, and any other additional questions we'll submit in writing.
Thank you,
I
Congressman.
yield back. Thank you, Mr.
The
Chairman.
gentleman yields back. The chair now recognizes the gentleman not from North Carolina but from Texas, Mr. Green, for 10 minutes.
Thank you, Mr. Chairman. I think it appropriate to give some indication as to why it's important for us to be concerned about activities of the third-party processors as they relate to the banking industry. And for clarity purposes, these third-party processors, as they are called, are businesses. And these businesses, for a fee, will accept payments from consumers, and they accept these payments, and they give these payments, they deposit them in banks for merchants. And it's a good business. There's nothing illegal per se about third-party processors. There's nothing illegal per se about the businesses that have been mentioned today. But I do think that we have had some things to occur that have caused us to take a look at this process. And quite frankly, I think the American people would want us to look into these things based upon some of the past occurrences. So let's take a look at a few of them. On March the 12th, 2015, and I am not going to mention the name of the banks, but if someone wants me to, I will. But on March 12, 2015, a bank paid $1.2 million in fines, $1.2 million in fines for knowingly facilitating consumer fraud. Consumer fraud, meaning people from our congressional districts were defrauded. It happened. It cannot be ignored. April 2014, a bank, name not mentioned, but available if I need to, paid $1.2 million in fines for fraudulent charges made by a third-party processor. Another fine paid, $1.2 million. March 10th, 2015, a bank paid $4.9 million in fines. The processor was allowed, in this case, to make hundreds of thousands of withdrawals over a 20-month period on behalf of a telemarketing company that charged unauthorized payday loan referral fees. Now, this would give the payday loan industry a bad eye, a bad reputation to allow something like this to occur and not take action. There is no effort on part of the FDIC to eliminate payday lending, but I do think that when we see these egregious circumstances, we have to do something. The banks should not just simply be a party to this by seeing it occur and not do something affirmative to stop it. They are there. They know that these things are going on, and they should take affirmative action. And they should have a compliance process in place. And when they do not, I think that that should be called to the attention of banks. And that's really what the FDIC appears to be doing. And here's one. On November 12th, November 2012, excuse me, $15.5 million settlement, 2 million fraudulent charges by a third-party processor. 2 million. These are people who are being hurt. I do appreciate what my colleagues have said about the businesses, and businesses who are operating legitimately should in no way be challenged about what their lawful business operations are. But there's a reason why we are looking into things in this area. And I want to thank you, Mr. Chairman, for the way you have aggressively made an effort to correct mistakes that were made. I have some of your testimony, and you did not go into any great detail, but I would like for you to respond. It appears to me that you participated in a national call with all FDIC supervision staff. Tell us about that call and what you were attempting to accomplish with that call, please.
Well, thank you, Congressman. As I indicated previously, we wanted to be sure that our examiners are implementing the policy that we've announced and clarified, which is that banks are neither prohibited nor discouraged from serving a customer as long as the customer is in compliance with state and federal law and the bank has the appropriate procedures and controls. And we established a set of processes for examiners to follow in implementing the policy. I don't want to repeat it all again, but it has to be in writing, it has to cite the regulation and law, it has to be approved by regional directors, and ultimately any actions have to be reviewed by our board. I took part in a nationwide all-hands call with all of our examiners nationwide to emphasize the importance both of the policy and of the importance of implementing the procedures to ensure that the policy is faithfully implemented. And I'm very committed to this. I understand the concerns that have been raised. It's a balance that you have to strike here, that we want banks that have appropriate controls, customers that are abiding by the law to have access to banking services. At the same time, we want banks to have an appropriate set of controls to identify any improper activity that may be going on. So it's a balance to strike. It's what we're trying to do.
You also met with the 6 regional directors. This is something you did yourself to make clear what the policy was in the event someone was unclear. Would you kindly give some intelligence on this?
Yeah, consistent with the call to all our examiners, I met with our 6 regional directors who oversee our examiners around the country, again, to emphasize the importance of and make clear the policy and the procedures that we're implementing to ensure that the policy is followed. I wanted to send that message from me directly both to our regional directors as well as to our examiners.
You've mentioned it, but I think some things bear repeating. Toll-free numbers that you have made available, at least 2. Would you reiterate, please?
Well, as I indicated, follow-through and implementation is really what's important here. That's the reason for the calls and the meetings and the establishing the written policies. And we wanted to give bankers a recourse, that if they think an examiner is not acting appropriately, not following the policy, not implementing the procedures, we wanted to give them a confidential way to report that. So we provided in our public statement a phone number and email address for our ombudsman, as well as a phone number and an email address for our inspector general, so that any banker that believes an examiner is not doing what they should be doing can report it on a confidential basis. And frankly, I would hope the banker would make the effort to report it to our regional office so that we can act on it directly, but I understand the concern and desire of some bankers for confidentiality, so we wanted to give them an avenue to report the information on a confidential basis.
And the notice process to banks has now been not only formalized, but it's been codified, and you have made it clear that this is to be done in writing. There will be no informal conversations that will be recognized. We all have some people who don't adhere to the letter and spirit of policy, but you have made it clear to people that your expectations are that policy will be followed to the letter and in the sincerest spirit with which the policy was promulgated. Fair statement?
Yes, I think so, Congressman.
Would you want to add anything more to this list of things that you've done to make sure that mistakes are properly addressed?
Just to be clear, that the procedures that you just described, we put in writing. They are public. Our examiners are expected to follow it, and the procedures make clear it has to be in writing. It cannot be in informal communication, and that reputational risk by itself is not the basis for an action. So we've tried to be responsive to the concerns that have been raised.
Thank you, Mr. Chairman. I will reserve my final 5.
The gentleman yields back. The chair now recognizes himself for 15 minutes. So, Chairman Gruenberg, I want to be clear in your testimony. The FDIC, by way of its list that came out in Supervisory Insights, this was not a target list by the FDIC. That's correct, right?
I don't believe that was the intention.
It was yes or no. You were the acting chairman. This was not a target.
No, I was, for what it's worth, that article came out before I became acting chairman. So
this was not a target list then, per your testimony?
I'm sorry?
This was not a target list?
I don't believe it was, no,
okay.
Mr. Chairman.
And your testimony is that at no point during your chairmanship has this list been used to target these groups that are enumerated on the list, right?
It would not have been consistent with our policy.
Not consistent with your policy. What has been the practice of the FDIC?
I believe the general practice has been consistent with that policy. There may have been instances, and that's frankly...
How prevalent are those instances where the practice of the FDIC hasn't been followed?
We don't know that. Frankly, that's what the inspector...
You're the chairman, right?
Yes, and that's what
Have you been looking into this yourself?
Well, we've asked the inspector...
That's not my question. Did you look into it yourself?
Have
you looked into the abuses of people who haven't followed your policy at the FDIC?
When the House...
Have you
I'm trying...
Yes or no?
I don't... The answer, I would
is
say
no, right? You have not looked into it.
I have looked into it, and the determination...
What have you found?
I'm trying to answer...
I'm trying to get an answer.
The determination we made in conjunction with our inside directors is we needed to get the facts, and that's really the basis for the Inspector General
So how long have you been looking at the
review.
facts?
Well, the report of the House Oversight Committee...
No.
Yeah.
You gave the information to the Oversight Committee.
Yes.
You had that information. You've
Yes.
known for 2 years that this was going on.
Well,
what have you done in the last 2 years to address Operation Choke Point or the targeting of these businesses?
Well, we issued guidance in September of 2013. We withdrew the list in July of 2014. We've issued additional guidance, and we've also asked the Inspector General
Given new guidance, right? So you were asked from some of my colleagues about a letter that came out from Anthony Lowe. And in there, this was February 15th of 2013. And I'm not going to read the full egregious paragraph, but just the end, it says, consequently, we have generally found that activities related to payday lending are unacceptable for an insured depository institution. Now, is Mr. Lowe still employed at the FDIC?
Yes, he is.
Yes, he is. And is he still in the same position as regional director?
Yes.
And is it part of your policy now that if you have an issue with one of your banks, you should go to the regional director, Mr. Lowe? Yes?
Yes.
Yes. Do you think a bank is going to feel comfortable having an examiner that's going after him for payday lending to go to Mr. Lowe, who's targeting payday lending?
And
that's your big answer to targeting payday lenders?
Well, I think, as you know, the Inspector General is currently reviewing, if I may just answer.
Is the Inspector General the chairman of the FDIC, or is it Marty Gruenberg? The buck stops with you, Mr. Gruenberg.
Yes, and it was important to us to get the facts in the case before taking any
Okay, so you have these facts, this letter, and you've done nothing, right?
Well, we've taken the actions I described, Mr. Chairman.
So what you've done is, in the last 2 years, you've waited for the Oversight and Investigation Committee to do a report for then you to ask for an IG investigation. So this is classic slow walking. He's still in this position. And we'll get to, I think, what the truth is behind what's happening here. I want to go through just a few more documents to make sure we're on the same page and how prevalent this work at the FDIC is. Thomas Dujensky, I'm saying his last name wrong, he no longer works at the FDIC, right?
Yes, sir.
Was he fired, or did he leave on his own volition?
He retired, I believe.
He retired, wasn't fired. Here's an email from February 7th. I'm pleased we're getting the banks out of the payday bad practice, etc. Another bank is griping, but we are doing good things for them. For example, the redacted bank is going to hate DOJ being involved. We're doing the right thing for sure. One or two banks may complain next week when the Florida bankers come to D.C. as a group. So we have old Thomas. We see how he feels about payday lending, but he retired, wasn't penalized at all. Thomas again says that he literally can't stand payday lending. That was in an email of November 26th. Let's see, we now have Seth Rosebrock. Jonathan heard where you're coming from, but nonetheless wants to retain a reference to pornography in our letters and / talking points. He thinks it's important for Congress to get a good picture regarding the unsavory nature of the business at issue. He represented that one is judged by the friends one keeps, and he seems to feel strongly that including payday lenders in the same circle as pornographers and online lenders and gaming businesses will ultimately help get the message at issue. Have you seen this email?
Yes, I have.
Yeah, would that disturb you?
Yes.
Was Seth reprimanded? Is Seth still employed at the FDIC?
No. Well, just so I understand, I think that email was referencing a comment by
Jonathan.
The individual you
Is Jonathan still employed at the FDIC?
Yes, and his conduct is under review as well.
Have you done anything has he been reprimanded by you, the chairman?
No.
No?
Not until we get the facts in the case, Mr. Chairman.
These are pretty, and he's still in the same position. He hasn't been demoted, right?
No, I think the view of myself and the other inside directors was we wanted to get the facts in the case before making a judgment in regard to an employee.
Dana Leisman, she says that although payday lending is a particular ugly practice, and then it goes on, but I'm sure Dana still employed and not been reprimanded. Here's one. Do you know an individual by the name of Mark Pierce?
Yes.
High ranking at the FDIC?
Yes.
Okay. This was from Marguerite, and I always have a hard time with Marguerite's last name. You know Marguerite, correct, though?
Yes.
Yes. Marguerite says, second, at the request of Mark Pierce, we are looking into the avenues by which the FDIC can potentially prevent our banks from facilitating payday lending. Mark Pierce, we're looking into avenues by which the FDIC can potentially prevent our banks from facilitating payday lending. Chairman Grunberg, Mark Pierce is at almost the top of the pyramid. Is he still employed at the FDIC?
Yes, he is, Mr. Chairman.
Has he been reprimanded by you?
We were awaiting the results of the IG review of his conduct.
Yeah, this was sent in 2013. This was 2 years ago. I'm not going to go through the emails, but I would argue that if I was you, the chairman, and I actually agreed with the targeting of payday lending, I would say, you know what, I'm going to slow walk it. I'm not going to do anything, and what I'm going to do is I'm going to hang my hat on the fact that an OGR report came out with all my documents, and then I'm going to look for an IG investigation, and I can slow walk this thing, and all the while, payday lenders across the country that are legal businesses, right? They're legal? Yes or no? Payday lending is legal?
Yes.
They follow the law.
There are some states, as you know, that don't permit it, but
they follow the law, they're legal.
In a lot of states, yes.
Are gun dealers, if they follow the law, is legal?
Yes.
Are ammunition manufacturers, if they follow the law, are they legal?
Yes.
Okay. So you haven't, the people that I mentioned, you haven't fired any of them, right?
That's correct.
I want you to look behind you. On the second row, I have a number of people all across the country. Gun dealers, ammunition manufacturers, payday lenders that have been targeted by your people at the FDIC. And guess what? They're going out of business. Do you want to look at them?
Yes, I did.
Did you see them on the way in?
I saw them when I came in, Mr. Chairman.
And what response do you have to them when these small business owners who have invested their life savings, who have worked their hearts out, and all of a sudden they can't find a bank to bank them because you say, not by way of the FDIC official policy, but all my top-level people, they've targeted their sectors, they can't find banks, and they're going out of business. What do you say to them?
Well, as far as our conduct, we've made every effort to make our policies clear that if the business is conducted in compliance with the law, they should.
Oh, you've made this.
If I could
go ahead.
They should have access to banking services. To the extent individuals may have acted inappropriately, that's currently under review by our Inspector General. And if there was misconduct, that will be then subjected to a review by myself and the inside directors at the FDIC.
So
Ultimate judgment.
you say is, yes, I knew 3 years ago, and I'm just going to act now with an IG investigation after the OGR report, and these people are still going to collect fat salaries in their cush positions, but the small business owners behind you, they're all going to be out of work, no job for them, and you call that fair. I don't, Mr. Gruenberg. I think you're the chairman, and I think if I recall in your introduction, did you go to Princeton?
I did, sir.
You're a very intelligent guy, and I'm sure that if you wanted to hold accountable those who were bad actors in the FDIC, you would. I don't think you want to hold them accountable. Let's talk a little bit further about what the FDIC has been doing with regard to its policies. From Thomas Dujensky, August 1st of 2013. This was a consent order. So we talked about payday lending. But Chance, did you ever look through some of these consent orders that were sent to our committee?
I'd have to know which ones you're referring to.
Well, we redacted the bank, but it's a consent order, and in regard to the consent order, official document, not an email, the prohibited businesses, and do you know what the definition of prohibited is?
I don't know the document you're referring to.
No, I mean the definition of to prohibit.
Yes.
What is the definition? Do you know?
I don't know the context. I just don't know the context in which it's being used there, if I may.
Okay, well, prohibited businesses, ammunition sales, and firearm sales. This isn't a consent order with a bank. So this isn't the official policy of the FDIC?
Again, I'd have to see the document.
I'll send it down if you want, but it's you sent it to me.
Sure.
So what do you say about a consent order for a bank that says you can't do business, it's prohibited, with ammunition manufacturers and gun dealers?
Yeah, I'd need to see the document and would be glad to review it and get back to you if that would be helpful.
I'll send it down in a moment. I got another one. I got a commercial lending policy, March 14th of 2012, undesirable loans. Undesirable loans. Guess what's on that list? Undesirable loans include firearm dealers. And you wonder and scratch your head, why are firearm dealers around America going out of business? Because the FDIC is targeting banks and saying you can't do business with them. Let's try one more. Anthony Lowe, who's still employed at the FDIC, right? This is a memorandum of understanding on April 2nd, 2014. When did you order your directive to stop targeting folks and make sure everyone at the FDIC was clear that this was not a target list? When was that sent out?
We issued guidance in September of 2013, making clear what the policy was, and then we withdrew the list in guidance issued in, I believe, in July of 2014.
So in September of 13, you were clear that you're not supposed to target these whole lines, these whole businesses, right?
I think that was never our policy, and we wanted to be clear that that was.
And Mr. Lowe did a memo of understanding, and on that list, he has prohibited acts and services, and on there is payday lenders. How could that be? That's after you gave the guidance.
Yeah, I'd have to look at the documents you're referring to, Mr. Chairman.
Well, you don't trust me. You gave them to me. They're your documents.
Yeah, I don't know which one you're. I mean,
do you want? Well, we have 2 minutes, so I'm going to send them down so you can look at them. Can you give me
I guess
a quick look?
What I'd suggest, if you're okay with it, is if we could have an opportunity to review them, and then we'll get back to you.
Well, I don't think there's an explanation for it.
Well,
I would say you'd be hard pressed, even with the Princeton education, that you have consent orders and memos of understanding that say you can't do business with ammunition manufacturers, gun dealers, and payday lenders. These are the official documents of the FDIC going out to banks. And then I have an email chain showing that you're targeting payday lenders and ammunition manufacturers. You're abusing your power. You're going after little guys all over America because I'd say, Mr. Gruenberg, you're a good liberal. You go, I don't like these industries, and I'm going to use, just like Lois Lerner, the power that I have at the FDIC to target these industries, and I'm going to put them out of business. And I'm not going to have a public debate because people like the Second Amendment and they like their guns. I'm going to do it behind closed doors, under the cover of darkness, and put these folks out of business as a bureaucrat and as an activist, instead of saying, you know what, I'm going to come clean and have a public debate. The bottom line is you're putting people out of business, and all the people in the FDIC who are implementing this program, they still work there. They haven't been fired. They haven't been reprimanded. And you're the chairman. And frankly, I got to tell you what, if you're not going to hold them accountable, I think the buck stops with you. I don't think you should chair the FDIC. If you can't go after and root out the problems in the FDIC, if you can't hold accountable those who are targeting legal businesses, you have no place as the chairman. That you've known for 2 years that this is going on. That you wait until we make public the documents that you gave us, and then you do an OGR report, or an IG investigation, and you say, you know what, after I get those results, I'm going to take action. All the while, Americans are getting targeted, and frankly, I think you're responsible. And if you're not going to handle it, I don't think you should keep your position. You want to respond?
Yeah. Well, Mr. Chairman, we have tried consistently, going back to when we received the letter from the members of Congress to respond to the concerns that have been raised. We've tried to clarify our policies. We've tried to address the issues raised by the list. We cooperated with the investigation of the House Oversight Committee. When we received the results of that investigation and the report, we then tried to take action pursuant to it, both to the policies of the FDIC as well as to the individuals raised. And in regard to the individuals, I will say that all of the actions that we've taken over this period of time, I've done in consultation with our vice chairman. We've tried to do it on a basis that involves our board, and we intend to work together to review the findings of the Inspector General. So we've tried, from my standpoint, I understand the points you make. We've tried to take a balanced approach to address
these people have no place
in a
in government.
responsible way.
I'm going to yield in a second. These folks have no place in government, and if you allow them to stay, you have no place in government. With that, my time has expired. With that, I see that the gentleman from Missouri, Mr. Luke DeMeyer, has come. We'll recognize him for 5 minutes.
Thank you, Mr. Chairman. Wow, I had 12 minutes there for a minute. Okay, down to 5. Mr. Chairman, good to see you again.
Thank you.
And just have a couple of follow-up questions with regards to some of the discussions we've had. You indicated in your meetings with us, and I think just for the record, in your testimony today, you indicate that in August 13th, you received a letter from Congress and you took some action. In July of last year, you did something and took some action. In January of this year, you took some action. But it takes us to get you to do anything, and it's very concerning because choke point is something that I think the chairman has done a good job of explaining is to the detriment of all of our citizens, all of our businesses in this country, which is it's basically your own moral judgments and political ideology that is being perpetrated as a result of through the rulemaking that you and the enforcement actions that you take. One of the things that we discussed at our last meeting, and something that's in your testimony today, is the new procedures that you said you agreed to. One of them was that anytime you would request that a bank would terminate a relationship with one of its clients, you would do it in writing and indicate so with showing the legal reason for that, excluding reputational risk, and then have a VP, regional VP, sign off on that. How many of you have done so far since our meeting in January when you implemented these changes? Do you know?
I don't know that there. Yeah, the first. We've also provided that for any actions taken, there be a quarterly report to our board.
Right. I understand that. I thought maybe you might have a monthly report to share with us.
No, we will have that first report in April, and we'd be glad to share that with you, Congressman.
Okay. Another question with regards to the FDIC board. Can you tell us who the board members are?
Yes, we have 5 board members, if you'd like me to name them.
Sure.
There's Vice Chairman Thomas Honig, Director Jeremiah Norton, who are 2 so-called inside directors full-time at the FDIC. And then as a matter of law, the Controller of the Currency, who's now Thomas Curry, and the Director of the Consumer Financial Protection Bureau, Richard Cordray, are also so-called outside directors and members of our board.
Have you shared these choke point activities with your board?
Certainly with the 2 inside directors, yes, because these are matters that generally go to the internal management of the agency and generally the focus of the attention of the internal directors.
But you have not shared this activity with
No,
currency or the director coordinator?
I believe they're also aware of it, Congressman.
No, there's a big difference here, and that's the reason for my question.
Yeah,
Are they? Did you inform them of what your activity is here? I mean, this is an Operation Choke Point. This is an operation within your agency that is condoned by you and all the activities that go on in the agency. And this should be something that should be at a board level. You should be indicating that to your board members that this is happening. Did you do that?
I'd have to check on. I believe they're aware. Certainly, all the documents we've issued relating to guidance are public documents that are available. And we've certainly made an effort to ensure board accountability for these actions. So let me get, if I may get back to you on that.
Okay. Well, I'm concerned because I think they all need to be aware of it. And we had testimony by one of these gentlemen. They didn't hear of it and didn't know of it, wasn't aware of it.
I certainly agree with that, Congressman.
So it would seem to me that that's where we certainly need to go with some of this stuff. I guess just to follow up on the Chairman's last comments with regards to, and we've had this discussion, Mr. Chairman, the culture that you've allowed to happen in the FDIC. How do you propose to solve the problem at this point?
Through the efforts that we've made, and I've described at the hearing, and we've talked about in our conversations as well. We've made every effort to make our policy clear. Clearly there was misunderstanding in regard to the list, which we acknowledge was a mistake on our part, and we've withdrawn the list. As you indicated, we've established a set of procedures, written procedures for examiners to follow and to provide in writing any explanation of any actions in regard to a bank. And we've issued a statement in regard to de-risking that any actions by a bank should be based on the individual customer, not in regard to any category of business. And I've engaged in extensive outreach with our both regional directors and our examiners around the country to try to make the policy and procedures clear.
But so far, nobody's been fired. Nobody's been demoted. The OGR report that shows there are people making statements like we need to audit you or threatens banks that, if we will audit you if you don't comply with what's going on here, or these certain industries don't have a moral right to exist. Those people are still employed.
They are, but their conduct is also currently subject to a review by the Inspector General.
Okay, the Chairman will indulge you one more question. In your changes that you made, the operational changes you made, you also indicated that there would be a website and a hotline number to IG.
Yes.
So to be able to report activities. Have any activities been reported at this point?
So we established numbers and email addresses for both the IG and our Ombudsman. Any reports to the IG or to the IG and are not available to us. Our Ombudsman has shared some of the results which that the Ombudsman's received, and I believe since the number and email address were made public, we've had 12 emails and 3 calls.
The gentleman's time has expired.
Thank you, Mr. Chairman.
The Chair now recognizes for 5 minutes the gentleman from Texas, Mr. Green.
Mr. Chairman, if I may, I'd like to have just a quick word with you.
I appreciate the ranking member's reasonableness. Thank you. The Chair now recognizes Mr. Hill for 5 minutes.
Thank you, Mr. Chairman, and thank you, Ranking Member, for holding this hearing. Mr. Chairman, glad to have you before us. I spent a better part of my career in institutions that had you as a primary regulator, so I appreciate all the hard work and efforts on behalf of the FDIC, which really prompted more shock when I read this package, knowing for 3 decades the work of the FDIC and its staff. I have a customer in Little Rock that sent me a note that just wanted you to be on the record on this question that he had. What would you say to a legally licensed and state and federally regulated business, like a pawnbroker, who do not use money service businesses, handle all their transactions face-to-face, don't use third-party payment processors, and don't use the ACH system, and yet still have fallen victim and had their banking relationships cut off because of Operation Choke Point? What am I supposed to say to that business in my hometown of Little Rock?
I would encourage them to, if they were to approach an FDIC supervised bank, we would make every effort to, assuming they're complying with the laws you indicate, that they'd have access to banking services.
Thank you, Mr. Chairman. On looking at the FIL 43-2013 and knowing the banking business and our responsibility to put people on a CTR list or file a SAR, suspicious activity report if necessary, my question is, in looking at your documentation, did that go through FIFIAC? Did that particular financial institution newsletter go through the FFIEC clearance process for interagency review? Or was it unique to the FDIC?
Yeah, the 2013 guidance was FDIC guidance. There has been a guidance relating to third-party processors that has been issued by the FFIEC.
But that predated the FDIC's FIL? Was that older?
There was
general guidance?
There was guidance prior to that, and I believe there's been guidance and an update to that as well afterward also.
And in those other agencies, did they name these same listed businesses in the same methodology that the FDIC did in your 2013 release?
The previous guidance issued by the FFIEC did also cite examples.
But was it as inclusive and comprehensive a list as yours?
Just to be clear, in the financial institution letter issued in September of 13, you could look at FFIEC guidance from 2010 that was roughly comparable. The Supervisory Insights Journal article list was lengthier than guidance that had been otherwise issued.
And this issue of reputation risk, which is something that examiners talk to their banks about as a part of the normal CAMEL process, maybe as a part of the management rating in the CAMEL review. Really, aren't banks responsible for their reputation, and therefore they ought to do business with any legally organized business in their market that needs depository services? Set aside even the credit issue for a moment.
No, and we've made clear in the guidance we've issued, and that guidance is public, that reputation alone is not the basis for a bank discontinuing a relationship with a customer.
But and yet that's what so much of these stories that have percolated back through Congress. And I find it as a former community banker and now a member of Congress and a former Treasury official who oversaw the regulatory process during the Bush 41 administration. I mean, I find it stunning that can go through a financial institutions exam council review and survive that list of businesses. I just don't see how it happened. And I agree with you, Mr. Chairman, that someone who's responsible for that really needs to stand up and take that responsibility. I appreciate you being here and responding to the committee's inquiries. Can you think of an example in the FDIC, switching topics, where the FDIC engages in price regulation, or the Comptroller of the Currency, any federal bank regulation where they actively engage in price regulation of consumer financial transactions between banks and their customers?
I mean, offhand, I don't believe we have authority to do that, Congressman.
So if two people have exact same credit backgrounds, exact same ages, races, borrowing backgrounds, and they live in two different cities in a state, and one is
got many, many job opportunities and one doesn't, do you think they deserve the same price for credit?
One would think so, assuming they have the same credit profile.
My time's expired.
The gentleman's time has expired. The Chair now recognizes for the last 5 minutes the gentleman from Texas, who I appreciate his cooperation and help in navigating members as they come in. Mr. Green for 5 minutes.
Thank you, Mr. Chairman. Well, Mr. Chairman, you now understand that no mistake will go unnoticed and no good deed will go unpunished. Let's talk about this for just a moment, last 5 minutes. You have requested an IG investigation. Is that abnormal? Is that something that you would do when you find that there is something that is questionable to get an independent third party to come in and give a report?
No, that's not routine, Congressman.
And you did this for a reason. Why did you do it?
Look, we thought the allegations made were very serious, and both myself and the other internal members of our board felt it was important to get the facts before making a judgment in regard to conduct by an employee of potentially this consequence. So we wanted an independent review and the facts gathered by our Inspector General before reaching a judgment.
You are not especially trained in this area of investigation, I assume. You are a fine public servant, but you don't perform investigations yourself. You would use the expertise of those who do this, and quite frankly, that the Federal Government is charged with the responsibility of accomplishing these ends. Is that a fair statement?
Yes, Congressman, and I would note that the initial request for the IG investigation was made by members of Congress, and then when we received the report of the House Oversight Committee, I supplemented that request by asking the IG to look specifically at individuals identified in the report.
And when you receive this report, is it your intention to take corrective action?
Based on the facts that are presented.
I understand. And you have done many things in the interim to make sure that people understand what the policy was and is. The policy has not changed. You've had some people who may not have followed it to the letter, but the policy hasn't changed. Is that a fair statement?
Yes, the policy's been consistent.
And you've had some...
And I would say I believe the policy has been consistent, and that's one of the things the Inspector General will be reviewing as well.
You had some people who have not adhered to the policy, the spirit and letter of the policy, but do you consider this a culture across the entire FDIC, or is this something that you're addressing as it relates to individuals?
Yeah, I don't believe it's what you've described. I think one of the things the Inspector General review will try to determine is the conduct of the agency over time, and was the application of the policy generally consistent.
In your years at the FDIC, have you always encouraged and required that the policies be followed?
Yes, Congressman.
And is this consistent with what you're doing now?
I believe so.
And do you believe that the FDIC should be charged with having produced Operation Choke Point? Is this something that the DOJ initiated that was brought to the FDIC? Just want to make it clear that this is not something you initiated, the Operation Choke Point. You're concerned about fraud, and you're concerned about third-party processors, but this whole operation is not something that you produced.
No, it was a Justice Department program.
And the Justice Department, in my opinion, has good reason to look into fraud, as is the case with the FDIC. But mistakes have been made. you've done what you can to correct them immediately. You are allowing a certain amount of due process before taking your final actions. This is not unusual in our circles to be thorough, investigate totally, completely, and then make decisions. Is there any final thing that you'd like to say in terms of what you're hoping to accomplish?
No, I agree with the points you've made, Congressman. We've tried to take a deliberate and balanced approach to this to address the issues in an effective way. And we're very committed to following through. I think the basic premise that businesses that are complying with the law should have access to banking services is a sound premise and an important one. We're committed to ensuring that we conduct our supervisory activities to achieve that outcome.
Thank you, Mr. Chairman, and thank you also, Mr. Duffy. I yield back.
Thank you, Ranking Member. He yields back. I'd like to thank our witness for, again, testifying today in front of our subcommittee. Without objection, all members will have 5 legislative days within which to submit additional written questions to the chair, which will be forwarded on to the witness. I ask our witness to please respond as promptly as you possibly can, Mr. Chairman. And without objection, this hearing is now adjourned.